You've seen the announcement so far, but again, this afternoon, the boards of both Vedanta Limited and Cain India Limited approved a merger of the companies. In this approved merger, the minority shareholders of Cain India will receive one equity share of Vedanta Limited and one redeemable preference share in Vedanta Limited with a face value of 10 rupees and with a rate of 7.5%. If you just look at the value of this based upon the market prices for the respective shares on Friday, this would be about a 7.3% premium to Friday's close. With the transaction, the Vedanta Limited shareholders would be 79.8%. The Cain India Limited shareholders would become about 20% of the new larger Vedanta Limited. And those, if you look at it from a Vedanta PLC perspective, the UK listed company, we would reduce our overall holdings in Vedanta Limited to about 50.1%. This would be effected by way of a scheme of arrangement, and I think that's quite important because that then means that this will only happen with the majority approval of the minority shareholders in Cain. So we believe this to be a compelling proposition for those Cain shareholders. We do see this as being conditional, as we said, on the Vedanta PLC, the Vedanta Limited, and the Cain India shareholders. And there'll be a series of government and other regulatory approvals in order to effect this. I certainly recognize in India and from a global perspective the importance of good governance.
As you know, Cairn is a great brand in India. With our discoveries in Rajasthan, we had the largest onshore discovery in 20 years. And this journey of Cairn, as the second largest producer of oil in this country, a very big player, the journey will continue in the energy space, but hopefully better with all the strength and the depth of a large natural resource company like Vedanta. So the headline for me, really, it's about we are excited at Cairn to be part of a much larger enterprise, a diversified enterprise, and as Tom said, the Indian National Resource Champion, the largest diversified natural resource company in India, and the 7th largest in the world. So what's in it for Cairn shareholders? Basically, it de-risks our exposure to single commodity. We continue to grow, and as the chart on the top right shows, that diversified companies earn much better returns than those companies that might be exposed to single commodity in oil and gas. So Cairn gets access to very stable cash flows, which support the investment cycle through investment for projects throughout the commodity life cycle. And the Vedanta assets are very, very good. Not only are they diversified, but we get access to a broad set of commodities which are low cost and have longer life assets. There is significant latent capacity in these assets, which provides opportunity to unlock value. And we have the best-in-class zinc platform. So the Cain shareholders would get exposure to this.